Let's take the discussion forward with Meghmani Finechem. Look at the stock. After a sharp gap down, the stock started recovering. Maulik Patel, Chairman and MD at Meghmani Finechem, is joining us to talk more about the results this time, which appeared to be weak, Maulik. In fact, the understanding we have now, talking to some of your peers in the industry, there are two kind of opinions out there. One believe that the worst for specialty chem and chemical sector is now getting priced in, and subsequent quarters sequentially things will start improving. The other side believes that no, it could be a long winter. Your numbers also came in under pressure this time. Which side of the argument are you on?
I completely agree. The argument on the first side, where the quarter one is almost, I think, is the down, and the quarter two will be almost, I think, things are started getting improved, which we see from last 1 month, and probably H2 will be a much better for all the chemical and specialty company. That's what we thought.
This is your worst quarter in how many quarters? The reason I want to understand is operationally, forget the reported numbers. As a owner of the business and a sector participant, this quarter which is being reported now by you and some of your peers, would you see it's a multi-year kind of a lowest performance or pressure performance? And from here, cyclically things will start improving, or one can't say it with certainty yet?
Yes, I would say yes. It is this kind of situation which we have seen recently because of the destocking is happening. Europe and US, all export-oriented companies are hampered a lot from India. So all the companies who are doing export from India, they are also our customers, and they are running low in the quarter one. So yes, this is first time in scenario which we have seen in last 10-15 years since the company started. But we see that this destocking will not stay much longer, and H2 will be a much better compared to the quarter one right now. So things will started getting improved from the quarter three onwards.
Right, Maulik, this is Vinny joining in the conversation as well. I get that you're saying, H2 will start seeing a recovery. But, just highlighting some of the concerns that we have right now also. One, because of the China dumping, there will be some pricing pressure that you're seeing coming in. When I'm looking at it also, mainly, realizations are down. Some people are highlighting about a demand slowdown as well. Is that a concern? Because yes, you're saying H2 is a recovery, but all these factors also are coming into play. So then how can we build in terms of what is the expectation there then?
See, that's true. The China was in pressure because China domestic demand was very low. And if you see in last 1 month, couple of raw materials not couple of, but many raw materials started going upward. So since last 3-4 months, in the quarter one, if you see all the prices are coming rock bottom, and now things are getting improved. So China domestic policy has also, they've changed something to revive their economy. And that's what we see from current last 1 month. Yeah.
How long this inventory adjustment, pricing bottoming out usually actually happens? Or you think it is already happening right now?
No. So I would say since January this month, it was started coming downward. And I think in the end of June or beginning of July, it was done. So now if you see in many of the raw materials started going upwards. So I think which we have industry, which we are talking in the, the prices are still, it is rock bottom. That has already done in last month. Yeah. So most of the people, they have taken their inventory loss also in the account. Yeah.
Right. And Maulik, just want a word in terms of obviously what should we be expecting from the company in terms of margins? What is the recovery expected? That obviously this time there is clear pressure. 21% is what your operating margins have come in at, as well as what is the guidance for the full year that you would be keeping for margins as well as your revenue growth?
See, it is difficult to comment for the full year, but H2 we are expecting, we will revive back as our two major project is also started getting completed. One is CPVC, another is chlorotoluene. So CPVC we are already having experience, and we are going to expand from the quarter three onwards. So we are getting additionally volume and the business from this year itself. So we are expecting the H2 will be much better compared to the H1 this year. But I think overall, I would say, you can expect around 25% of the EBITDA level on a year as a whole if H2 will be revived as we thought right now.
Fine. So you are building in a revival in H2. Because of that, you're building that kind of a margin estimation. Maulik, I want to understand beyond the 2 to 3, 4 quarter, have your, because of whatever happened in the industry, disruption on pricing, inventory, demand, all of that, did you scale back your capex in any manner, or have you kept your capex intact? Because that actually will tell whether business people like you and industrialists like you actually are very negative or not. If you have kept your actual capex 3-4 years capex plan intact, which means you expect things to revert back to normal. So tell us that picture.
Yeah. So I would say, so far we are expanding in the chloroalkali segment and the derivative segment both. So now next 5 years, our focus is 100% on the derivatives expansion. And what we thought that India's demand is going to grow only from this level itself. So India needs more chemicals in India, and India is going to be net importer in all the chemicals. So definitely our capex is on the derivative sides more in next 10 years. So we are going to be more focused on the specialty and the value addition chemicals rather than the chloroalkali industry.
Yes, that was more commodity in nature, and this is derivatives and specialty where the margins is the more chemistry goes into it and hence higher value. But good chatting with you, Maulik. Your inputs are very important for the industry also to understand that perhaps the worst for the industry is already in the price, in the numbers, already factored in and accounted for, and things will start improving. Pull up the last 1 year chart for this for the stock price, and you would see what exactly has happened. So this is a bombed out area where very good quality promoters are doing some fantastic work. Capex is unaltered. So that is a big indication. Look at that. Over the last 52 weeks, the stock has almost halved. This is an area where value buyers and long-term investors should look at very carefully.